Alberta-based trucking company Mullen Group reported a drop in profit from last year, but revenue rose with the help of some acquisitions. And here to talk more about those numbers is Murray Mullen, Chair, Senior Executive Officer, and President of Mullen Group. It's good to have you join us. Thanks for taking the time.
Good morning.
I do want to talk about the acquisitions, but I'm going to start with the profit decline in the third quarter, down about $5 million from the same time last year. Why is that?
Well, I think what you're hearing from most businesses is that, business is pretty competitive, and, you got customers that are struggling in the marketplace. And so at the end of the day, it really has to do with pricing. And, you can't really cut your way, get costs down fast enough as competitive as the market is. So I think that's the number one fundamental reason why our business units, that we have the same business units, and those kind of things. But there's freight to move, there's business to do, but cost pressures, whether it's labor, whether it's price of new equipment, whether it's just taxes, et cetera, we just couldn't pass on the price increases to our customers. Very competitive markets, bit of an imbalance right now between the amount of freight to haul and the amount of trucks available and equipment and capacity in the system. So that's the primary reason. Hopefully it's not forever, but that's what we're in right now. It's a price competitive environment for sure.
You said you didn't want to pass on those prices to your customers. Are you going to continue to kind of try to absorb those prices moving forward, depending on how long term it is?
Yeah, that's the debate I think that every business is going to have. How long can you continue to not generate profit? Because eventually you can't reinvest in the business if you don't generate the appropriate returns. So it's pretty competitive right now. We cut back CapEx as a result of anticipating that it was going to be more competitive. So you can't do that forever. Eventually you have to make an acceptable return so that you can make the appropriate capital investment, because we haven't seen the prices of imported trucks and trailers that, truthfully, that's most of them are imported. We don't make them in Canada. And so, that's going to be a challenge. We're going to have to address that. And I can't address it all on the cost side. Eventually, we're going to have some type of price stability in the market with our customers, or we're going to have to come up with new technology that makes us way more efficient. And that's what we're asking of our suppliers, our truck suppliers. Say, come on, you got to help us get better fuel mileage. You got to help us get our costs down. We're asking that of all of our suppliers. So that's kind of the market that we're in right now. But suffice to say, our revenues were up because we acquired new companies, but our profits were down because it's a very price-sensitive market right now.
Got it. Okay, so let's talk about, you say your top-line growth is being driven by some acquisitions. What kind of acquisitions are we talking about here?
Well, we've announced earlier that most of these were earlier this year. So we just had a full quarter's numbers of results from those companies. So, for example, Cole International, which is a major customs brokerage company in Canada and the United States, we acquired them June 1st. So we had a full quarter of their revenues. And that was a pretty good sized transaction for us. In fact, that was the second largest transaction we've done in our 30-year history of doing acquisitions. So that's primarily what we're doing. We think that the tariff, trade, duties issues are not going to go away, which is why we invested in the Cole Group, and it really adds to our service offering that we can give a kind of a more packaged deal to our customers. If they're going to import goods, we can transport it, we can store it, we can do the customs paperwork for you, we can provide a full complement of services for our customers. And that's the thesis behind why we made it. It's a good company already, but we think we can leverage what they're doing across our whole logistics network is what our plan is going to be. And it's early innings. Like I said, this is only really the first full quarter we've had that company, but so far so good.
So Cole International, Pacific Northwest is another one. Moving ahead,
Yes.
like you kind of touched on this, but what are your expectations for long-term earnings with some of these acquisitions?
You know what? I mean, you would never do an acquisition, at least we wouldn't. I doubt anybody would, unless you had a long-term view that said that acquisition is going to pay off long term. So we think that there's a long-term thesis that trade and tariff and the government's wanting to know what's coming into the country, what's leaving the country. We don't think that's going to go away. And the customs brokerage people, they're the platform we have, that they do all those entries or transactions for customers. P&W is another really interesting one, Pacific Northwest Transport. They haul all of the less than truckload up to into the Yukon, into Whitehorse, for example. And if you're going to invest in Canada in mining, mining is going to be really defined as hard rock, and that's the Northwest Territories. It's Yukon, it's British Columbia, Northern Ontario, Quebec, etc. So Manitoba. So we like going into the communities with LTL. We think all communities need to be serviced. So we think those are all long-term investments. That's why we made them.
Okay, Murray Mullen, Chair, Senior Executive Officer, and President of Mullen Group. Appreciate you taking the time. Thanks so much for joining us today.
Always a pleasure. Thank you very much. Have a great day.